Gold and silver rebounding today after that historic collapse. Our next guest says with continued geopolitical tension, we should continue to see precious metals perform well. Let's go to Paul Harris, portfolio manager at Harris Douglas Asset Management. Paul, thanks for joining us. What's your outlook for gold and silver for the year? Did you anticipate this correction?
No, so we don't own any gold stocks or silver stocks. That's one thing, but I think gold has always kind of been this representative of if the world is sort of in a difficult situation, geopolitically or economically, and I think that's what you're seeing today. Is you're seeing this sort of continued geopolitical issues that are facing the world globally as the U.S. sort of pulls away from alliances, et cetera. And I think you're also seeing sort of the general kind of the U.S. administration acting in a more chaotic fashion about a lot of things, right? So I think that's really what's pushing up gold, and then obviously silver gets the benefit of all those things. The other thing, obviously, is the kind of continued weakness of the U.S. dollar, which has helped these commodities, right? So I think that as long as we see this a world we're living in where there's such turmoil, I think people will certainly want to move into gold and other precious metals. I mean, I think the other issue, what happened on the day it fell a lot, was that they had a new Fed governor, and I think the issue with that is that most times when a new Fed governor comes in, they kind of do policies and procedures of how everything is run and try to kind of figure out how they want to envision the Fed being run. And I think that the new gentleman has a very different vision of what the Fed is. I think he felt that their mandate had become too wide, that they were, quantitative easing, although it's a necessary evil to be used in difficult times, was not pulled back fast enough, and so the Fed balance sheet became quite large. And so I think there's a lot of that talk about how he's going to kind of run the Fed. That doesn't mean he can drop interest rates as Donald Trump wants him to do, but it may mean that the Fed is viewed very differently from a perspective of how we move forward with when there's a big problem in financial markets, et cetera, or how we kind of envision the Fed acting in certain ways in different times, right? So I think that's kind of all those things were kind of a shock to the market when he came, especially the precious metals. And the last thing I would say is that these things have run up a lot. So, kind of healthy pullbacks, what I think people would say in a bull market in commodities is an important thing.
Okay, let's get to Palantir reporting earnings. Why do you think it's seeing the strength it's seeing when other software companies really aren't? Is it just their government contracts that they rely on?
Yeah, it seems to me that way, right? I mean, well, one of the things, they beat revenue, they beat EPS, and then also they gave very positive guidance going forward. So I think that's kind of helped out. And you've kind of not seen that on the software side with some other these kind of tech companies where you've not seen them sort of give kind of meaningful, kind of positive outlook for the next several quarters, right? So I think that's helped out Palantir a lot. A lot of their business presently comes from the government, right, and governments. And so I think that's really kind of, and especially in the world we're living in today, I think they benefit from that. So I think that's what's really helping the company out. But it is one of the most expensive stocks in the S&P 500 today. So I think that you have to be cautious about when you're buying something at these multiples, whether they're going to be able to achieve that valuation over the long term.
Okay, let's talk about Meta, which did report earnings, Amazon and Alphabet to come. What are you looking for? What are you watching in the metrics for the tech companies?
Well, I think from Alphabet and Amazon, I think there's a couple of things you want to look for. The first thing is that on the advertising side, because they're both big advertising companies, do they show the same kind of metrics that Meta shows? Are you seeing the use of AI improve outcomes on the advertising side for these companies, like you saw with Meta, right? So I think that Meta, out of all the kind of tech companies, it can achieve that a lot faster because they're kind of dealing with retail clients. So would you see that with Google? Do you see it with Amazon, which has a very large today has grown their advertising business quite a bit. I think the second thing you want to see is their cloud business for both these companies. They're very big in cloud. Amazon's number one, Microsoft's number two, Google arguably is number three. Are you seeing sort of their continued growth in cloud, like you saw with Microsoft? But Microsoft also came out and said that they've seen some constrictions on their ability to grow quicker. So I want to make sure that you're seeing that there is growth, but are they seeing the same issues with Microsoft is seeing, or are they in a different thing and a different part of that? Are they seeing very different metrics? And the last thing I would say is that, everybody's looking at all their massive CapEx spend, right? So I think that, for the next couple of quarters, what do they see as their spend? Are they seeing a reduction in that spending? And I think the other thing that people are worried about with a lot of these companies is that spend is gotten to be so large that it's affecting their balance sheets in many ways. And so I think what people want to see is that how they manage revenue/costs. You saw with Amazon that they're laying off about 16,000 people. And that's partly because they're using AI more effectively within their firm to offset some of the kind of use of technology. They're using AI to bring down the number of employees that they need to work on a lot of projects. So I think you're seeing the use of AI internally within these companies. The offset is whether they can offset that enough to, on the CapEx spend side and have a much better revenue to cost ratio, which I think people are really worried about.
All right. Paul Harris, got to leave it there. Thanks for joining us. Paul's portfolio manager, Harris Douglas Asset Management.